Hello, welcome to another edition of the Small Caps podcast. I'm Peter Capsanis. Today I'm catching up with Geoff Lucas, who is appointed CEO and Managing Director of the Agency Group. The agency is a Perth-based national real estate company, which in recent years has grown to capture more of the national market. So hopefully he's brought along his crystal ball to tell us how the residential property market is going to look like in 2022 and beyond. Geoff, good to have you on the Small Caps podcast today.
Absolute pleasure to join you, Peter. Thanks for the opportunity.
Look, let's start off with some insight. And by way of an introduction to you, you were previously the CEO of a much larger competitor, McGrath's. What drawn you to the agency other than lots of zeros on your salary package? And why are you excited about the future of the company?
Yeah, thanks for that with the zeros, Peter. Look, I guess to start with, my background is as a professional CEO, not solely in the real estate industry. It happens that I have been in the real estate industry for the better part of the last dozen years. And so, yeah, correct, I was with McGrath for the best part of the last 11 to 12 years as the CEO of that organisation. I find that the Australian real estate industry is a wonderful opportunity to lead a business with growth prospects. These two companies differ significantly. And back to your question as to what attracted me to the agency was a pretty good understanding of the landscape of the Australian real estate sector and the thematic of movement and how it's looking to change and how I believe it will change into the future. The vast majority, Peter, of the industry is populated by large franchise groups, and that's a legacy to the past. And these franchise groups operate by having a brand or a company at the top. They have a franchisee in between the brand or the company and then the transaction and where the coalface, at the coalface where the transaction is happening. What we've done is we've contracted directly from the company down to the agent. And so we don't have that other party of a franchisee in between us and the agent. We find that's a financial benefit for the agent. We're able to pass through a higher split, but we also find that it's a more direct route for us to communicate our philosophies and our brand promises to the end consumer without that interposed franchisee level. The other way that we differ and what attracts me is we don't believe that you need necessarily a real estate office to transact real estate. Increasingly, business is done and marketed and transacted digitally. And so whilst we do have offices for our agents to come to, they're more hubs that are large functional workplaces, and they're not bright edifices that are sitting on every street corner because simply the customers don't go there anymore. We do need somewhere for our agents to collaborate, and they're normally in large purpose-built hubs that are functionally appropriate for the work that they're doing, but increasingly they're finding that they're out in the communities in which they serve. And so that's the second major difference between this business and the majority of the industry. And I find that an attractive proposition because I think that's the way that the industry is moving into the future.
Yeah, well, it's definitely a good explainer if no one's sort of known how the functionality of the agency operates on. Having been a recently former investor myself, how do you see the growth? Where do you see the growth for the company? I mean, obviously right now, across the board, the residential market is flying across the content. Property prices, I'm here on the West Coast, you're there on the East Coast. Affordability is really a major concern. So if, I guess in a way, there's a shortage of stock, particularly here on the West Coast, I assume very much so similarly there on the East Coast. So does your growth come from more sales and higher commissions? Is that the natural progression, which in turn leads to better outcomes for your shareholders? Where do you see, in general, the growth for the company coming from, given you're operating under the model that you're operating on?
Yeah, definitely, Peter, and it has definitely been a purple patch for the industry over the last certainly 12 months, and perhaps even 18, perhaps even to 24 months. In terms of transaction numbers, We've seen on the East Coast, particularly toward the end of last calendar year, that stock levels or supply levels actually increased. You haven't yet seen that in Western Australia. I suspect that will come once your borders open in the near future. However, the important thing for us as a company is to grow our market share. We don't just want to be seen as growing as the tide goes up with transaction volumes and price levels. That's not the way that we score ourselves. We currently represent just under 1% of the Australian market in terms of transaction numbers. We have an aspiration to grow that market share significantly, and the reason we think we can do that is because we have a different model, and that's a model that is attractive to agents because they want to work in that environment, and it's also, we believe, attractive to our end customers as well because of the service levels that we have. So it's about growing market share rather than just growing our revenues and our earnings as the transaction volumes increase.
So where do you see the source of your market share and growing your, this figure of 4% of the national market by 2026? Where do you see those streams coming from?
So we're very lucky. Well, we're lucky. The harder we work, the luckier we get. In WA, we have a very substantial business. We do see continued growth there. We have some 145 agents in WA, and we see significant opportunities in that state. However, we have far less market share in the eastern seaboard, and we see growth across all of the eastern states. Most recently opened markets include Queensland, where we have currently just 22 agents, Victoria, where we have 16 agents, and the ACT, where we've just kicked off with the first 4 agents. So those coupled with New South Wales represent very, very large growth opportunities.
So it would be fair to say that you're, even right now, pitching for more agents to come on board and join the agency gospel, so to speak. Does that necessarily mean that you're going to acquire more of the market share? Is that kind of one of the aims?
Yeah, so Peter, growth will come both via organic growth, which is simply the attraction of agents to our business model, but it will also come through appropriate M&A activity. And we see some good opportunities. We believe that the highly fragmented marketplace at the moment that I described before is ripe for consolidation, and we see an opportunity with our business model to lead that consolidation, which will lead to further efficiencies in our business model as compared to the remainder of the industry.
Okay, so I touched on it a moment ago. Property prices around Australia are flying, no matter where you live, and you touched on the fact that there's more stocks coming on the market over there on the East Coast. We haven't seen that here in WA, and I suspect that stock will probably dry up as more people flock over here once the borders open, although perhaps you're right, maybe there will be more supply coming on and people will be wanting to offload. So are we seeing do you know, in terms of the transactions, the data, what are we seeing? Are we seeing investors sell off? Are we seeing homeowners sell and make the tree change or the seed change? What's the mood?
Yeah, certainly on the eastern seaboard, where we've seen that increase in transaction volume and listings, we're seeing both that sea and tree changes. And so we're seeing a significant migration from the southern states, call that Victoria and New South Wales, to the warmer states of, say, Queensland. I mean, COVID has given us a number of, I guess, badly wrapped gifts, but what it has really shown is that you can do your work not necessarily at the office all of the time. And so we're seeing not only does that benefit people moving to lifestyle locations to do their work, but it actually serves to attract people to our business model, given the comments that I made before about real estate offices, because largely you don't need to be in the office to do your work. But we are seeing people move to the coast, to the regions, away from the cities. And as I say, more stock certainly in the East Coast, and that's been a healthy thing because we cannot go on having price increases in the mid-20%. Some part of that was catch-up from a period where we didn't have a lot of growth previously. But as human beings, we always kind of overshoot the mark a little bit on the upside and the downside. And we believe that we're now heading into a period of more modest house price growth. Our internal forecast here for metropolitan cities around Australia is between 4 and 6% for the calendar 2022 year. Now, that will vary between cities, but far more moderate than what we've seen. Obviously, the spectre of potential interest rate increases toward the back end of the year has tempered buyer demand a little bit more. What you will see in your Western Australian market when more supply comes on is buyers will have more choice. And so you won't see such rapid price increases. And that's a healthy thing for both the real estate market, but it's also a healthy thing for those parties that we were discussing before, the new first home buyers who have largely been priced out of the market. So more modest growth as those first home buyers generally access higher wage growth than the rest of the community, and that makes affordability a little bit better for them. So that's what we look forward to, certainly in the back end of this calendar year.
Well, 4 to 6% projected growth still isn't anything to be sneezed at. So still growth, but at a lower trajectory, if you will.
Correct. And just to make the point there, we think that the large portion of that will be in the first half of the year, and probably in the back quarter of the year we'll have zero or negative in some regions.
Right. Okay. So this trend, from what you're saying then, isn't for anyone watching right now and listening. The bubble, this big bubble we've had over the last 12 to 18 months is going to be bursting soon, it'd be fair to say then.
I think that's a little bit alarmist, talking about bubbles and bursting. It's interesting. One of the large investment banks internationally did a study on bubble markets for residential property, and they ranked countries. And I think Australia came in about number 14. And so whilst we think it's terrific for those that hold property or is meteoric, on the world scale, I guess cheap money has caused asset price inflation worldwide. So we're certainly not alone, and we're certainly not the most expensive. And so rather than a bursting of the bubble, perhaps a moderate tapering and a soft landing.
Fair enough. So will stronger sales down the track and around the corner result in the agency being viewed as a stronger brand? What's the long game? I know you've touched on it, you've got this model and this growth, but obviously it's not just reliant on transactions, it's more to it in terms of growing the brand and growing the market. So what's the long game here for the agency?
Yeah, so Peter, a lot of the legacy brands in Australia have been around for a very, very long time. And I talked about franchise brands, and that's the way that real estate services had previously been distributed around the nation and, in fact, the world. We're different because we contract directly with our agents. And so we see that as an attractive business model for a lot of the agents. We see them earning more money. And so really that underpins the major part of our growth in the immediate term in terms of attracting more people to our business model. Now, we're more nimble as well. The franchise groups are not able to adapt their business models because they have long-term franchise agreements in place with their franchisees. They have leases with their street corner offices, which we don't have. And so that underpins our growth. But certainly, as I mentioned before, consolidation. We're a listed company and we have a balance sheet. And so we're able to participate and drive that M&A activity where we see good quality businesses with people that would like to join the agency brand. The agency brand has only been around for 4 or 5 years. And so at the inception of its business, people didn't quite know what it was and what it represented. Increasingly now we're starting to communicate that to the community of vendors and purchasers, but also to the real estate agents. And we're now seen as an aspirational brand for people to come and do their business there. So they're the growth drivers that we see.
You've also got a finance or a mortgage broking arm. Can you explain a bit more detail about that, and how does that help underpin the business model?
Yeah, so obviously we come into contact with, we probably see at the moment, Peter, about 600,000 different people each year from our home open activities. And so when we come into contact with those people and they're looking to buy or sell properties or buy investment properties, clearly there's a value proposition there that they're going to need finance at some point in time. We actually have a rent roll that has about almost 4,000 properties under management. So if you think about that as an asset value, that's about $4 billion in asset value that we manage on behalf of investors.
Sure.
There in itself is an incredible opportunity if you assume, say, an LVR of conservatively 50% on those properties. That's a $2 billion funding opportunity for the clients that are at the end of our fingertips. That's without talking about the 600,000 people that we deal with personally each day of each week, of each year in our natural real estate business. So there are various adjacencies that make a lot of sense for us to participate in and to allow our customers to avail themselves of.
So it's not quite often you get a real estate company, a national real estate company listed on the ASX. More commonly, it's mining and resources. So to all the mum and dad investors watching and listening right now, what's your message to them? Why should they invest their hard-earned dollars and cash and invest in the agency? And I take your point about your rent roll there, which is obviously a bit of a good income and revenue stream within itself, separate from any kind of sales and transactions on the sales front. But obviously, given you flagged a 3% or 4% growth over the next 4 or 5 years, why should they look at the agency and why should they invest in the company?
So a couple of things there. I think with the sales and services business, you have variability in income and obviously profitability. What we seek to do is to mitigate those variations. Our rent roll and our annuity type businesses give that mitigation, but importantly, we're currently just short of 1% of market share. The fee pool for the Australian real estate sector in terms of commissions to be earned is about $6 billion. For all of the real estate agencies that exist in Australia, about $6 billion. Now, to put that in perspective, last year, we thought we had a pretty good year. We went from 49 million to 81 million, about 60% growth, quite strong. I'll just reiterate that, 49 million to 81 million out of a total market pool of fees of 6 billion. Why would you invest? If you back this leadership team to take an increased market share from our 81 billion to increase our share of that from 81 million, our share of that $6 billion fee pool. I guess that's the nub of it.
So it's a good carrot for any would-be investor.
And I think so. I think also with variability in the sales cycles, etc., we are growing from a very low base in market share. We're not just riding the variabilities and the increase in price and transaction volumes.
Well, Geoff, it's certainly a fascinating and interesting journey, I think, what lies ahead, irrespective whether rate rises loom in the back half of the year. And I think I saw you quoted recently in an article that the industries are around a $9 trillion real estate market in terms of industry in Australia. So there's lots of cream on the cake yet to come by the sounds of it.
There is. We're very excited about the opportunities for our business. And obviously, like most Australians, we love the asset class that we deal in because property is loved by everybody in Australia.
Well, Geoff, we look forward to talking more and seeing you more and seeing how the agency journey unravels over 2022 and beyond. And hope we can catch up again on the Small Caps podcast sometime soon. But in the meantime, thanks for joining us today.
Many thanks, Peter. I look forward to that as well. Thank you.